Good afternoon, everyone. This is Duran Yowitz over at Alpha 7 Training. Blah, 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 blah. Good afternoon. This is Duran Yowitz over at Alpha 7 Trading Academy. Here to continue another. Blah, 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 blah. Hey, everyone. This is Duran Yowitz. Hey everyone, this is Duran Yowitz over at Alpha 7 Trading Academy. I'm here to continue the series of chart patterns made easy. Triangle patterns are probably my favorite as I believe them to be the easiest to identify and also provides good probability of it working out. Triangle patterns are formed with trend lines connecting the highs and the lows in a specified time frame. They usually visualize shrinking range of price movements as compression builds until the price breaks the range ferociously. There are three types of triangle patterns. The most popular are ascending triangles and descending triangles. Now, ascending triangles are meant for breakouts, so it's pretty simple. Ascending is upwards, so breakouts, are pretty much together. So they're correlated. So descending is downwards, and then you have the breakdown. And then you also have the symmetrical triangle for trend continuation or failure. Now, what I mean by failure is usually if it gets close to the apex, right to the point, what happens is it's usually going to fail and then create a wedge. But we'll do wedges another time. Now, triangles should have at least 3 points of contact on both the top and bottom trend lines. So it's very easy to identify, very simple rules. The triangle should make a break as it nears the apex. And the apex is that break point, the tip of the triangle. The longer it moves without breaking, the greater the chances of a failure. Now this is very important because most places don't usually teach that. You won't find that online. But here we do have some sort of nuance that allows us to know earlier whether this triangle is still working out or whether we should start reacting differently to it. So the first one we're going to go over is ascending triangles. Now, very simple, the way I teach people for ascending triangles or any type of triangle, ascending or descending as a matter of fact, is that it involves a support or resistance line and also a diagonal trend line. Okay? So if the trend line is sloping upwards, then that's ascending. If the diagonal trend line is descending, then it's a descending triangle. So ascending triangles form when a resistance price level holds firmly while the support continues to steadily rise and tight the channel until the upper trend line finally breaks out on strong volume. And you can see here on the right chart, you have 3 places, 3 test zones, and then you have the break to the upside. Here's the apex, and it's well way before the apex, so we know that this still is in a working progress and does have the capability of creating an ascending trend line. Now, the handles on cup and handle patterns can often have an ascending triangle pattern. So, you could see here that you have some sort of cup and handle, okay? And targets are the distance from the first peak to the trough added to the point of the break. So you take that distance and then you add it on top. Now this just gives you a mediocre target, but at least gives you a range of where you could find good price targets before liquidity starts to die out and dissipate and then it starts to go back down, and you don't want to be caught in that. So you have same highs, higher lows, same highs, higher lows, breakout to new highs. Now, descending triangle, like I said before, you have the diagonal trend line going downward, so we could understand that that's a descending triangle, right? And then you have the support. The previous one was a resistance line. This one is the support line. So same thing goes. Descending triangles form when a support price level holds firmly while the resistance continues to fall. Okay, you could see that by these lower highs. Okay, lower highs, lower high, lower high, lower high, and then you have the break. Okay, while the resistance continues to fall as the channel compresses until the lower trend line finally breaks down on strong volume, which you see here. Failed triangles turn into wedges, which, as I was explaining before, so maybe the next video I do will be on wedges, so stay tuned. Now, targets are the same thing, where you take from the top, okay, to the bottom, and then you bring it down from the support line to wherever the target or the price range was. The lower trend line break is the stop level. Now, this is important because this is a trailing stop. It's not a fixed stop, because as new data comes in, this diagonal trend line is going to continue to push lower, and that will be your stop, and vice versa for ascending triangles. Lastly, we have symmetrical triangles. Now, symmetrical triangles are very unique. They're very good to find. I like them. You got to really find some nice caliber. What I mean by caliber is that it actually does follow all the rules of a symmetrical triangle. If you're trying to nudge a little bit and try to bend the rules, it may not work. So, symmetrical triangles have lower highs and higher lows as the range compresses for break. So basically what's happening here is the price, the highs and the lows continue to consolidate, okay? And usually the original direction of the trend is the direction of the break, since these are usually continuation patterns. Very important to know, right? Another type of nuance that most people don't really understand about symmetrical triangles. Now, the most important nuance that I think is that the closer it gets to the apex without breaking, the greater the chances of failure. So as it gets close to this apex, okay, you're going to have to start rethinking and reanalyzing what may happen. You may not want to take this move, right? And since the first move trend was upwards, then you would expect the symmetrical triangle to go upwards, right? Break out. And targets are the distance from the first peak to the trough, same thing, added to the point of break, okay? Now, something interesting here is that symmetrical triangles, the key word is symmetrical. And what happens with anything that you're using symmetrical, especially in trading and technical analysis, and something called harmonics, which maybe I'll touch on a little bit on YouTube. But what happens here is that this continues. And what happens is the diagonal line goes down this way, and the diagonal line goes up this way, and continues to form. And this could become a broadening triangle, okay? And a broadening triangle is where it starts to expand, making higher highs and lower lows, okay? And if it fails and does not hold within that, then that could turn into a wedge. And that is it for triangle patterns, made easy. I hope you guys enjoyed. Take care and stay tuned for the next video and possibly series of candle patterns and chart patterns. Have a great day.